Welcome everybody to the sixth episode of Crypto Clarified, Investing in the Truth. It's a podcast series where we try to come together each month to discuss some of the most captivating headlines and trends from the crypto space. My name is Jason Guthrie. I'm head of digital assets here at Wisdom Tree. I'm joined by my co-hosts, Camilla Russo, founder of the Defiant Media, and Ben Dean, also works with me here at Wisdom Tree. In today's episodes, we'll be diving into, I think there's a lot of regulatory news this week with the announcements out of the UK and some legislation that's going through the EU that I think has some relatively broad implications for how the space has been developing. But before that, I mean, maybe just taking a quick look at the month that has been. From my perspective, it's been a very typical crypto month, right? We were up 20% and we were down 20%, and no one quite has a particularly good reason why, other than there were more buyers than sellers, and now there are more sellers than buyers. But everything's sort of moving in a lockstep. The interesting thing for me, I think, over the last month is that because we are trading in this range, because the price action hasn't been, anything particular to write home about, a lot of the noise around crypto seems to have dropped away, and people can talk a little bit more about, the fundamentals and some of the more, I don't know, interesting protocol level things that are going on. But I'm not sure what you guys think. Camilla?
Um, yeah, I think that's right. Like the price is just in this very like volatile, a bit of like sideways range. So what's coming to the front is more the like technical developments, a bit of M&A in the NFT front. Uh, it's interesting to see like NFT fraud doesn't like it's just like refusing to go down for some reason. Like I don't think that was like anyone expected that. At the Defined, we covered how pudgy penguins it was kind of blowing up. Um, Recently, Coinbase announced it's producing a movie about the bored apes. So you have like all these news about NFTs like still blowing up. Another thing in the past month that's been interesting on the DeFi front is news about just like algorithmic stable coins, and how they're kind of working to keep their peg on the Luna and UST stablecoin front. Do Kwon made headlines because he said he's like gonna buy a bunch of Bitcoin to use as a reserve to back its
Yeah.
UST stablecoin, and that's just been a whole kind of wild ride. And then to top it all off, there was Bitcoin Miami last week. I wasn't there, but Defined reporter Owen and our community manager was there, and it was just like it felt like I remember Bitcoin Miami last year was this just like huge, like it felt like a coming out party for crypto in the mainstream. Like there was like FTX Arena that had bought the Miami Arena, and it was just like crypto took over the city. um and this year just like I don't know, like I guess from just like from what I've seen, it just seemed like a little bit sad.
Yeah.
Like there wasn't a lot of like real news or innovation going on around Bitcoin.
No, it felt, I mean, the conference, I think there's a lot going on around Bitcoin if you step away from that. But I think it's a little bit sad that like headline conference that people sort of hold up as this, as you say, this like place that came to make these huge announcements about Bitcoin in the past has become a little bit of an echo chamber. I think it's probably
Mm,
not the same event on the map that it was 2 or 3 years ago. Definitely not what we saw kind of last year. And a lot of people sort of shouting. Well, I think a lot of people just took the opportunity to shout in person what they normally shout on Twitter
yeah.
about how they love Bitcoin, which is not necessarily moving the space forward. So, yeah, I kind of agree that we didn't necessarily get out of that what we would have liked. But I mean, a couple of other things you mentioned there, I think, have been really big news. Stablecoin continues to be big news in
Yeah.
various ways, whether it's the reserve for Luna, like buying all this Bitcoin in order to back that algorithmic stablecoin. or interestingly, the news that Ben, you were telling me about earlier in regards to Lightning Network looking to move into the US stablecoin space.
Yeah, it's been a nice month for people who like to hear themselves think. Uh, just to have the chance to sit back for a little bit, kind of monitor what's going on, not be pulled along by the latest Elon Musk headline, and sit down for a second and look into some of this stuff that's going on. It's been a real pleasure, actually. One of them, yeah, indeed, it was the Bitcoin Miami conference. Lightning, the layer 2 transaction uh, implementation on Bitcoin. Lightning lets people send and receive Bitcoin quickly and cheaply. The Lightning Labs, which is a group that's done a lot of development on Lightning, announced that they've raised a large amount of money to begin migrating an implementation of stablecoins into that second Lightning layer. Strike, Jack Mallers, the CEO of Strike, which is an app that uses Bitcoin Lightning, announced that a number of retailers were planning on integrating that technology into their stacks. I noticed Kraken implemented Lightning, and when one of these exchanges implements something like Lightning, they basically flick the light switch on for thousands of users for this scaling technology. That's nice in a way to see that. That's not buzzy, that's not headliney. That's just the kind of commercial work that has to occur for people to be able to get and use Bitcoin in more ways than they could before, which ultimately at some point should translate into price. So there was that
Yeah.
element. And the other one that caught my attention, and there's maybe a nice segue here, I've been monitoring the Ethereum merge. It's meant to be the merge with the Beacon chain coming in June as Ethereum moves from proof of work to proof of stake. And I've been monitoring that merge, like the technical testing around it. Next week, I'll be at the Ethereum Amsterdam Dev Connect. I'm just looking forward to spending some time around the people who actually build this stuff. That's far more interesting, at least from where I sit, and perhaps more predictive of what's going to come in the near future in terms of opportunities. Just getting the time to sit down and think this through at a real builder level.
Right. So I think maybe for those listening that aren't that familiar with the terminology, you talk about the Ethereum merge, right, which is a technical step that is taken in progressing Ethereum to what was colloquially called Ethereum 2.0. But the big feature that people are looking at for that is the transition to proof of stake from proof of work as a consensus mechanism, which sort of is looking for more throughput and changes the energy requirements on it. So I think that's a big moment that the market has been kind of following for a couple of years now, and it's been delayed, but we're now seeing some sort of signs on the technical level. They're entering a new phase of testing, etc. That means that this is maybe coming on the most recently announced schedule, which is mid this year, if I'm not mistaken.
Yeah, it should come around June. Could be later in July. Keep in mind that Ethereum evolves over time. Bitcoin does as well, but much, much slower and in different ways. And this latest upgrade, change to the mainnet, is going to unlock a lot of ether that's been locked up already in these. You lock it up in a node, a bit like a deposit, really, and you receive more ether for having helped perform the validation of new blocks on the blockchain there. So that's coming at a technical level. I did see it covered in the Defiant, Cami. Have you been monitoring it for where you sit? And do you think as everything's on track for June?
Yeah, it looks like things are on track. It's, this been has been such a long time coming. ETH 2.0 now rebranded to just Ethereum. But this switch to proof of stake, it's been in the works for years now. We've had the Beacon chain, which is effectively just like the proof of stake chain working, and that's where people have been locking up their ETH for staking. Now, what the merge does is put together that proof of stake chain with Ethereum's current application layer. So really, you're switching the proof of work base layer that's underlying the current application layer for this new proof of stake chain. And something to keep in mind is that it's not, it doesn't actually, proof of stake doesn't actually increase throughput. It does reduce the amount of energy required to secure the Ethereum chain by like 99%. I don't know. It just like, if like really cuts the amount of energy required. Uh, but throughput is basically pretty much unchanged. What can improve throughput is the following kind of steps in the process of upgrading Ethereum, which is sharding, and that's not yet kind of, slated to be released anytime soon. So the current plan is really this merge of Ethereum's application layer with the proof of stake chain, and then continuing to develop um, uh, like layer two solutions is kind of the short term fix to Ethereum's throughput and like scaling problem.
So these are layer two solutions like Polygon,
Yeah,
basically.
like optimistic rollups, side chains like Polygon, zero like CK rollups is kind of the next technical kind of step that's kind of coming live. So yeah, all those innovations still very much kind of in the early stages. I think like yeah, I still find them very hard to use, but at least they are providing some relief.
Yeah, ZK rollups is another one that it feels like we heard a lot about that toward the tail end of last year, and then it went very quiet. So it's another one of those that seems to be a bit slower than maybe the industry was hoping for.
Yeah.
Yeah. The other story I've been kind of following closely, and I know Cami the Defiant's been looking at this one as well, but is the venture activity in the space and a couple of big announcements around like Binance and Uniswap spinning up venture arms to kind of,
Hmm.
for me, this is a good indicator that there's still a willingness for the space to kind of fund the new innovations on the side. But I'd be interested in your take on it as well.
Yeah, I think there's been kind of this I don't know if discrepancy, but there's the public crypto markets that's been kind of in this correction, or like just like a very volatile phase after last year's bull run, and then there's the private markets where venture funds uh, just last year and through this year have been raising just billions of dollars in capital to deploy into crypto. Like there was a new Andreessen fund last year. There was a Paradigm, like 2 billion or so fund. They also raised. Framework Ventures raised like also like another billion. So it's like you saw all this like build-ups of different crypto funds raising massive amounts of money, and you're not seeing that kind of going away. And I guess like the recent trend is that um, Web3 or like crypto like big crypto firms themselves are spinning up venture arms to
Mhm.
deploy capital after just like the massive gains they had last year. So that's what you're seeing with Binance and Uniswap. So I think what that means is that even as the public markets are suffering these kind of macro headwinds with rates going up and so forth, um, at least there's enough capital to deploy and sustain innovation in the public in the private markets. There is
Mm.
money to continue funding startups building in crypto, and so I think that's pretty bullish news for the space.
Yeah, no, I think it's definitely good news that there's that willingness to kind of fund and support the projects, which I think kind of dovetails nicely into our first kind of major topic this week, which is taking a look at the announcement out of the UK. So the government announced that it wants to set up a plan to make the UK a global crypto asset technology hub. And I am reading through the announcement now, but the Chancellor said, it's my ambition to make the UK a global hub for crypto asset technology. And the measures we've outlined today will help ensure firms can invest, innovate, and scale up in this country. There were parts of that announcement that have looked around, how they want to bring stable coins into the payment infrastructure. There is, announcements about creation of legislating for an infrastructure sandbox to help the technology underlie financial services of the future. So there's a couple of interesting elements here. I think they also announced that the Royal Mint is going to create an NFT, which feels more marketing than substance to me. But it's interesting to see this announcement coming from the UK. I think, well, there's two things. It seems to closely follow the executive order that came out of the Biden administration in the US, and it'd be interesting to talk about the timing around that. But there is then this broader question with these two sort of, pretty well developed financial sectors, financial services economies in the US and the UK, saying they want to become a hub for this innovation. What does that really mean? Because a lot of these are just general intentions at the moment. So, what do we think a country, a government, a regulator can do or should do to help drive this innovation, to have it happen onshore, to help, I guess a lot of this is aimed at keeping the technology onshore, the soft power that comes for that, and the jobs that come with that. But how do you go about actually creating an environment that encourages people to do that in a given jurisdiction?
Something's definitely happening, isn't it? Like you just said, all this venture capital, more venture capital went into this space last year than the 6 years before combined. And then in like 6 weeks, we've had two announcements from two relatively large governments, each one saying in their own way, we understand that this space exists, it's big, it's not going away. And by the way, we want to host all the companies, tax their profits, and then also we want to tax anything that people are doing with this technology. So there's a fascinating level of recognition here that hasn't been seen outside of maybe Switzerland or Singapore in just the last couple of months from the US and the United Kingdom. Your question's what can they do to bring it all back, basically. And rather than delving into the details on that, I would say as a preface, like it's not great to be in this position, is it? People make decisions on where they're going to incorporate their companies and set up their operations. Now, when I did work for Coin Center, which is a crypto think tank based in Washington, D.C., I did work with them 4 or 5 years ago. And I went to a bunch of different countries to see who was building this technology and companies around it. They were all incorporating in Singapore or Switzerland 4 or 5 years ago. They were certainly not incorporating the United States. And the biggest problem was clarity, having a clear position. The government had made it very clear what was and wasn't allowed, and their regulator would look at things on a case-by-case basis. So too did Singapore. I would posit as just a first step here, clarity is what's going to be required as just the first order of business to even think about managing to coax these businesses onshore here. But we can explore other reasons as well. Jason, I know you've taken with various entities as part of setting up WisdomTree's products. Where would you start? And I guess we can go around in a circle and think about more ways in which they might be able to pull it off.
Well, I mean, it's an interesting question. I mean, you talk, if they talk about, what can they do from a legal perspective? I think, clarity. I think flexibility in terms of any rules that you put down is one half. The other half is going to be around incentives to help people come and set up here or in any particular jurisdiction. And I think the third element is going to be around talent and how can they create an environment that the people that want to work on crypto, the people that are building this, want to come and be domiciled in one jurisdiction. So I don't think there's an easy answer to any of this. It is very complex. And I think if you overlay onto that as well, the world in which we live in at the moment, like as a result of the pandemic, people are much more flexible. People do a lot more work remotely. Things happen, much more internet natively, particularly when it comes to cryptocurrency. So what does this notion of actually, creating this development in a particular jurisdiction, it does get a little amorphous when compared with industry in the past, anything that required a physical presence, which really this just doesn't. So it's going to be interesting to see what combination of those things are going to be attractive to people in kind of the years to come, and how they can go about doing it. I mean, the question, Camilla, I would have for you? I mean, you spend a lot of time talking to people that are really on the coalface of DeFi, I think in particular, but also, you know, NFTs and other innovations that are happening in the space. What do you think the creators, the developers of, you know, various projects or content within the space are really looking for from a given government or authority? What would actually help these guys build better or quicker, make them more competitive?
Yeah, so I think clarity is the main issue that people are lacking and looking for. I think just like globally, just like having a regulatory framework where founders, users, investors know where they stand from a legal standpoint. Like, is the token they're creating a security or is it not? And what is required to make it to make sure that they're not kind of stepping in kind of in like dangerous territory. And the US hasn't been great at doing that. Like, it's been kind of just like notoriously unclear with the SEC especially just like coming out and saying everything is a security, but like not giving clear guidance on how to avoid being a security, and so it's just like scaring people. But at the same time, it hasn't been the worst either. Like I think we talked about maybe last time the executive order from Biden saying, you know, basically acknowledging that this is an important innovation that the US wants to stay in the forefront. Like, so saying, you know, like, we're not banning this, like we want to figure out a way to make this work. That was positive. um so I think like that's clarity, a legal framework to work with crypto is the main thing builders and creators are looking for. But I think like more important than that, people are looking for a community. And even in this kind of post-COVID world where everything is more remote and digital, people are still looking for and even like more so because of that. Like, people are looking for hubs where they can connect with people building in the same industry in the same area. They're looking for places where they can find talent. And so we see like New York, in spite kind of being probably one of the worst places to actually incorporate a crypto company with the bid license, um, still drawing so much crypto talent. Like, I was at a Crypto Mondays yesterday, and yeah, it was like, I don't know, 100 people there. The Defiant has started like a monthly event, like a meetup here at our space in Dumbo. And 70 people, you know, showed up in kind of for our first ever event. And you have just like meetups, events every single day of the week. So that's important to people building. Like, you want to connect. So just like traditional tech and finance hubs, uh, are carrying over that kind of network over to crypto. So like New York, San Francisco is an important crypto hub. Like, so many VCs are based there. And then like in Europe, like Berlin and now Lisbon is attracting a lot of crypto talent because it because of its kind of regulation. It's like been very friendly tax wise, and just like visa wise for
Mhm.
builders. So yeah, I think it's like a combination of all those things. Like, sure, like incentives, tax incentives, making immigration easy, um, having clear regulatory framework, but also having a strong network, community, and talent pool.
Yeah, I think making it easy for talent to enter the space is a big deal. I mean, there's an interesting question. Do you think that crypto, those that have developed for the space, have historically been supporters of sort of, open source, of doing things on their own, of doing it as a community driven? Do you think they want a governmental framework or support, or they're happy continuing to do this sort of on the edges of the internet? And if you do think that the existing group doesn't want that kind of governmental involvement in the development process, do you think setting this up could attract sort of the next wave of technologists, maybe those that aren't going to be the early adopters, but pulling, though, if there's a more certain regulatory framework, does that encourage, strong talent out of places like Google or banks or wherever to come in and start developing in the space?
Yeah, no, I think that's exactly right. I think for like the early adopters, they were just gonna ignore whatever, the regulators and the government was saying, and we're just like gonna like go ahead and build wherever they were. And I think that's kind of what's happening right now in New York. It's like whatever, they'll just like incorporate their companies in New Jersey or Delaware or like the Cayman Islands, whatever, and like still kind of build in New York. Um, but I think, you're right. Like for the next wave, like the more mainstream wave to come, and to be able to like uh, poach talent from like Web 2 and like the big tech firms, it regulatory clarity is going to be necessary, because we're not talking about like the risk takers anymore. Like I think that phase already happened in crypto. I think we're past that initial phase, and we're kind of in the scaling up phase where you just need like a top tier talent that's in Web 2, and I think they will need they're not like as they will be a little bit more risk averse, and will want more assurances from regulators that they're not doing anything illegal.
Yeah, I think that cuts both sides. Like you say, scaling up, I talk about crossing the chasm for this technology a whole bunch, right? We got 200 million users in there to date. Like, how do we get the next 2 billion in, and sort of having probably more solid frameworks and more solid regulation around the groups that are building these things, and, maybe more mainstream talent or larger numbers, I think going to be important in encouraging that next wave of people to kind of enter the space. And the other element to these sort of plans is taxation, right? I mean, how important do we think getting that right is? It's always a big topic, and we've seen places like Portugal attract a reasonable amount of development talent simply by saying we won't tax cryptocurrencies.
Yeah, it was the reason why it's not just the nice weather in Lisbon. A lot of those early adopter open source developers, very talented European and other people, they could get entrepreneur passports, but they would just move to Lisbon. The government there said very clearly early on, no capital gains tax on any crypto assets. Now, if you start a company there, you pay profit on the taxes. And if you earn a wage there, you pay income tax on it. And of course, you pay your VAT as you buy things, goods and services. But that was very clear, unequivocal. And they caught a lot of those early adopter technical types. I like your point there, though. Does that work again? Do you even want to play that game? If you want to build a company that services 2 billion people, do you want to be in Lisbon, or do you want to be close to the city of London, one of the world's financial hubs? And I suspect, looking down this list of measures that the UK government has said already, they've said they want to introduce a financial market infrastructure sandbox to allow companies to experiment and innovate. Perhaps some of those companies that can actually service that quantity of people, orders of magnitude more than crypto networks have serviced so far, actually would benefit from being somewhere like London, in a financial hub, the same way as Taipei or New York for that matter. And implicit in that, I think, Cami, you just said, it's just knowing that you're not going to be banned or shut down, or you're going to have a whole lot of new arbitrary costs thrown on top of you. Because then those companies will go somewhere else where a more progressive approach is.
Definitely. Are you guys going to be lining up to buy the Royal Mint's NFT?
It's really something, isn't it? The Royal Mint will be. I was minting NFTs on the weekend on my cell phone, and I thought, like, wow, we've really come to this point where the Royal Mint is going to be doing that. Imagine off a cell phone as well. I'm not quite sure, like, what's the deal there.
I mean, it's the Royal Mint. You'll probably have to fax something somewhere, I would guess.
So I didn't get that the Royal Mint NFT. Is it like a stamp of the Queen, but like an NFT or like
I,
I
I,
don't.
I haven't seen much meat on the bones of the plan. I may have missed it, but I think there was just the general intention to do an NFT. So I haven't quite got what they think they're doing there. As I say, I think it's probably a marketing gimmick to
It
get
is a
this.
marketing gimmick, but I think it also sent, like a pretty. I think it sends us a signal, right? It's like it's like we're supposed to be this kind of like very traditional institution, but we're going there. Like we don't care. Like we'll do an NFT.
Well,
Yeah, yeah,
it's entered the lexicon for sure,
Yeah.
NFT. So
Mm.
it's definitely something. I mean, uh, this actually contrasts like this conversation about what do you need to do to foster the innovation. I think contrasts quite starkly to what we've seen happening in Europe over the last sort of couple of weeks. So for anyone that hasn't been following it, there's proposed UK legislation that would, sorry, EU legislation that would uh, significantly increase the burden on firms operating in the crypto space to collect information about wallet holders and transactions, and to transmit that information to authorities that has come under quite a lot of criticism from those operating in the crypto space as sort of being anti-privacy and anti-innovation, which I think is, as I say, it still shows that we've got quite a patchwork of regulatory approach globally. But it's interesting that they're going down the path. Now, I think it's sort of relatively clear that this is a response to the current kind of situation in Europe, the war in Ukraine, and the desire to enforce sanctions on various people, and a fear that the cryptocurrency ecosystem is being used as a way to skirt around these sanctions, which sort of I personally think is an oversimplification of kind of what is happening in the space, and is sort of an extension of what is mostly a debunked narrative around cryptocurrency being the primary way in which illicit activity is carried out. Right. And so it's interesting to see that they're grabbing onto this. It feels to me like it's a response to headlines more than anything else. But Ben, Camilla, I mean, I don't know if you've got a take that this is sort of a narrative that shouldn't be getting traction anymore.
usually when these things enter into bills and organs of the European Parliament, they come from groups of people, majority of whom are lawyers. They very rarely have people in the room who actively develop or work with the technology in question. And I say that as someone who used to be the person in the t-shirt trying to tell them how this stuff works, how it doesn't. So when I read something like this, it does look like transposing the way in which KYC AML works in the old rails. Tell me who this person is and where this is going above a certain limit. But then remember at the beginning of this discussion, I said, there are these layer 2 lightning applications with Bitcoin. Like, I'm not even sure how those rules map onto the way the technology works and the way it's evolving. And so by the time this comes out of the trilateral discussion between the Council of Europe, the European Commission, and the European Parliament, I'm starting to look at this like it's going to come out in 3 years. It's going to be out of date. And I don't want to go straight down the rabbit hole on GDPR, but there is a kind of, I'm getting that feeling again as that I got when GDPR was coming through the machine, that this could have some good stuff in it and be a few steps forward, but it comes so late that it's already a mile behind.
Mm. Well, maybe let's sort of pull some of the details then out of sort of what's been proposed. So, uh, I think there are kind of two big requirements that people are talking about. Okay, so one is it's required to ID any financial service involved in the transaction is required to ID not only their own customer but also the destination wallet, including self-hosted wallets. Um, and they need to collect personal information about the ownership of that wallet as well as holding data on that wallet. So there is this privacy concern around the requirement to gather data on people that aren't, aren't a client of that financial institution. There's also a worry about the centralization of sort of honeypots of data being a target for hackers, which is floated around. But I think the big one and the fundamental one is that privacy issue around like, does this lack of privacy impact the desirability of crypto? Is this the primary reason that people have shown up? The second big we can dig into that, but the second big requirement that the legislation is proposing is that they would need to, and I'll quote, inform competent authorities of every transaction that happens. In the existing financial system, it's only transactions above €1,000 that require reporting. So there's then this deviation of legislation being put to work against crypto versus legislation being put to work against traditional financial services. So there's then a discussion point around where does this asymmetry come from, and does that create an unlevel playing field for the two somewhat competing industries? But I think the first question there is, does a reduction in the amount of privacy from these crypto firms potentially kill the reason that most people show up to use crypto, that they want to put money to work here, or that they want to transfer value in that ecosystem?
Tough to unpack. So many trade-offs.
I think the answer is no. I think that there is value here beyond this, and I don't think
Yeah.
acting anonymously is the only reason people show up. And I think that should sort of get taken off the table from this conversation to start with.
Yeah, I agree. I think like thinking that the primary reason that people come to crypto is because of, privacy, which I think that's just a misconception, because as we all know, crypto is a lot less private than the traditional finance system. Like, if all of your transactions are recorded on a public blockchain forever, so it just takes kind of mapping your identity with your wallet, and you have no privacy. So I think it's kind of the opposite, actually. But like this idea that crypto is pseudonymous, so that attracts criminals, has been long debunked. Like the amount of the percentage of activity in crypto that's done for illegal activities is 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 a very small, it's a fraction relative to the main use case, which right now is speculation. To be very kind of blunt, that's what people are using crypto for right now, not illegal activity. On the other hand, cash continues to be the main way that criminals use to transact.
Mhm.
So I don't think that's the case. I think what what this does is really kind of limit the the how seamless DeFi and Web3 are supposed to be. Kind of the very benefit of it transacting in a non-custodial way, where you
Mm.
don't have to provide information uh, to the application you're using, because you're just transacting directly with a smart contract. All those efficiencies that you get from
Yeah.
removing intermediaries and third parties, you are you know you're kind of losing those benefits if you are adding this additional burden of centralized, like, on ramps into
Right.
DeFi to add to include reporting.
I think that's the fundamental piece here. It's not the lack of privacy per se, but what you're really doing is restricting the ways in which this can operate differently. You're like,
Yeah.
okay, if you, oh, fine, the technology can exist, but you need to do everything exactly the same as it always was. You're not going to be able to iterate the business models. They're not going to be able to sort of innovate and change and find more advantageous use cases, because these things aren't drafted on legislative floors and then put into the reality. There needs to be some experimentation, I think, in the space, and that's kind of what you're getting at, right, Cami? The ability for this to operate in any kind of non-custodial way. If you just make that illegal, then how do we go through that iterative experimental process where we could end up at a better space with less intermediaries, less friction, less cost in the system?
I mean,
Um,
it's like not giving up those your information, like not setting up an account, transacting directly in a non-custodial way. Like, that's the reason why this system is better, and why it was kind of uh, revolutionary and
mm,
different. Like, if you're making it behave in the same way, then you might as well just like not use crypto. So
Right.
I think there's like an argument to be made for it's not about not doing any KYC, AML, but it's about kind of getting to the purpose of those regulations, like making sure that no illegal activity is being done with crypto. But instead of
Mm.
using the old systems to achieve those goals, why not use the technology itself? Like why not use chain analytics to detect fraudulent uh, accounts, or like use like blockchain to use blockchain to trace those illegal flows of money,
Right.
right? Like use the technology in the way that it's native to itself, rather than impose like rules that were made for another type of system.
Yeah, look, I think what you're observing there is something I agree with. This is not, there's ways to deal with this. They're reacting very acutely to a moment in time and events that are happening right now, which is understandable. And no one's saying, sanctions should be circumvented or, KML isn't important, because of course it is. But if they were more proactive in sort of setting a framework and understanding the technology and bringing it in under the regulated umbrella, again, in a more proactive way, at some point during the last decade, then it wouldn't be this kind of bum rush to get it done now in a very aggressive, draconian, overbearing way that I think will fundamentally stifle innovation, at least in this jurisdiction. But that does sort of ask a more philosophical question, and that is, does the EU care? Does it actually want to be a hub for this jurisdiction? And does crypto as an industry need the European Union as a jurisdiction to build within? Or can rather the technology packet, once it is fully matured and formed, be imported as part of their financial system in 5, 10, 15 years' time? I mean, they don't have to be part of the early stages, and maybe it's more desirable. Maybe as a society, as a political environment, at least now, they're more comfortable with that. I mean, Ben, you've spent a lot of time working in economic, pseudo-political establishments in Europe. What do you think about this? Do you think it's a priority for them to help develop the innovation?
They can be a bit short-sighted sometimes. I mean, we talk sometimes on the show about Web 1, Web 2, and now supposedly we're entering Web 3. Remember that Europe became somewhat of a technology colony of the United States following Web 2. All the big tech was based in California, and anything that became big in the European Union, like Skype, was acquired and then moved out. So, I mean, the European Union woke up to that reality quite late, pushed through GDPR over the years to try and maintain some semblance of sovereignty over the personal data of their citizens, but it was kind of a suboptimal outcome compared to the way they could have done it. I think this time around we're seeing it happen again. You've already just covered very well that this approach seems to be trying to mesh an old way of enforcing compliance onto a new set of technology rails that doesn't really work very well. Doesn't really play to the strengths or the weaknesses of this new technological set of rails. I think there's a deeper element as well. It's not even a question of like, do certain organs of the European Union want certain kinds of technology and innovation to occur? If you really pushed them and you said, like, you claim on your EU charter that privacy is important and that people's autonomy is important, and then they go and put these rules up against those principles, I'm not even sure that they quite on board with it. It signals to me that there isn't a big picture view of this. It's ad hoc, it's reactive, and ultimately might end up solving some problems and creating more, a little bit the way that you have to shut a cookies window every time you open something in the European Union now because of that GDPR.
Mm.
So I could go in deeper on privacy, but we don't have time. It's maybe a topic for another day. That's a whole topic in of itself.
Yeah, no, it's super interesting stuff. But I mean, it's a very interesting moment in time when we do have so many kind of large organizations coming in to start shaping like the direction of travel, and be it supportive or unsupportive as it might be on a jurisdiction by jurisdiction basis. I think we're starting to see that. Look, for me, this is further proof that this space isn't going anywhere, right? Like, they're only dealing with it in this meaningful way because it is here, it's established itself, people want it, and people are using it. And that's why, these governments, these regulators, legislators are weighing in any shape or form. So I think it's a really interesting, informative time for crypto. And I'm sure we'll be talking about these topics more and more in weeks to come. But as usual, we have run over time. So look, thanks for joining me again, guys. I hope everybody listening found this one useful and informative. It's been great fun and super interesting as usual. Please do reach out if you've got any other further questions. info.eu@wisdomtree.com. Thanks again for listening, and have a great day.
Thank you. Bye.
Bye all.
If you'd like to learn more about cryptocurrency trends, WisdomTree hosts a wide variety of research and educational resources. Visit our website at wisdomtree.eu/crypto to stay current on the latest crypto developments.